So good morning, good afternoon, and welcome back to the new era of agriculture commodity trade. Welcome to the session 2, day 1 of Commodity Week World 2026 or CWW 26. Just a small mic and video check. Neeraj, am I visible and audible?
Yes, sir, loud and clear.
Awesome. So Neeraj is my colleague. He's CEO of HnyB, a big force behind having this marathon event, which will span for 6 days. We'll talk about it. So earlier today, we opened this global marathon by dissecting the massive demand crucible of Asia and Pacific region. Now we are chasing the sun westward to explore a completely different yet equally critical theater of global trade. We have declared that the agriculture value chain has crossed a critical threshold because of what is happening around us. From climate to crisis, collaboration to cooperation, we have seen a lot of C's impacting the global agri-commodity trade. So C is just not in commodity, but in multiple other areas as well. The traditional playbooks, the one that relied on predictable crop cycles, stable freight corridors, and reliable trade alliances, has officially expired. We are no longer observing cyclic market corrections. We are operating within a baseline of permanent structural volatility. Over the next 6 days, across 18 tactical sessions, we are bringing the global boardroom directly to your screen. CWW26, organized by HnyB Tech Incubations, Know Your Commodity, is presented by AgriGuru Online and supported by Crypco Agri, Bajrang Group International Dubai, Bingani Group India, also with our association partners like OATA Myanmar, Ukraine Pulses and Soybean Association, and GOPKI Indonesia. Other institutional partners include Solidaridad and World Cooperation Economic Forum. CWW26 is moving entirely beyond the delayed data of historical balance sheet and heavily scripted presentations. This is an unscripted, unfiltered war room. We call it war room because that is what is the flavor we have been seeing for past couple of years. We are here to democratize high-stake market intelligence, mitigate the systemic risk of information asymmetry, and equip you with foresight needed to defend your margins. We continue our focus today on the most vital, dynamic, and heavily contested agriculture commodity on the planet. Welcome back to the Maize Complex. As a reminder, our sessions are beamed live across multiple digital assets on LinkedIn, YouTube, X or Twitter, Facebook, and our event website. You can find the links in the comments. Let's talk about the macro view. While wheat and rice are foundation of human survival, oilseed dictate the energy transition and pulses then give us the nutrition security. However, maize is undisputed roaring engine of global agriculture. It is the foundational building block for the world's human calories, animal feed, the backbone for industry's starch sector, and the fiercest battleground for domestic fuel mandates. Globally, the maize balance sheet is caught in fierce hemispheric battle, and the latest institutional figures confirm tightening grip on the market. Let's look at the baseline number. The world corn output stood at roughly 1.3 billion tons for 2025-26 marketing year, while it is anticipated to drop at close to 20 million metric tons in 2026 and 27. With a marginal increase in global demand, we are shifting rapidly from surplus of the previous seasons into a scenario of deficit. The tightening of stock for 2026 and 27 year could result in drawdown of 20 to 24 million metric ton, leaving ending stock at highly vulnerable 270 to 275 million metric ton. Market is actively pricing in the extreme vulnerability of Brazil's safrinha crop and evaluating the impact of these tighter global carryover numbers. When you combine that with the logistical choke points threatening the bulk container shipment across the oceans, these reduced ending stocks suddenly fuel incredible fatigue. But the true complexity of the global balance sheet lies in feed versus fuel metrics as well. Maize supplies are being aggressively cannibalized by domestic energy mandates, when massive volumes of grains are diverted into ethanol production in Americas as well as in Asia. It permanently raises the global prices floor for the food and livestock feed sector everywhere else. To truly understand where the global maize markets are moving, we must now shift our gaze to a region where the geopolitical tension, shifting regulatory frameworks, and acute food security needs violently intersect. Which brings us directly to our second panel of today, the Europe, Middle East, and Africa theater, where the geopolitics, climate, and regulatory mazes are too many. Here in Europe and the Middle East and Africa, the maize narrative is dictated by extreme supply chain frictions and constant recalculation of risk. Let's break down EMEA pressure points. First, the Black Sea choke point within this region remains the absolute critical hinge for the global maize trade. The flow of grain out of Ukraine and the broader Black Sea corridor dictates the baseline availability for the entire EMEA region. However, geopolitical tensions and the constant rapid recalculation of maritime war risk premiums make this most unpredictable origination corridor on the planet. For buyers relying on this vital pipeline, securing supply is no longer just a matter of price, it's a matter of geopolitical navigation and managing extreme maritime execution as well. Second, the European deficit and regulatory matrix is also very complex. We know that EU imports close to 19 million metric tons of maize, with Ukraine remaining dominant supplier, giving more than half of the Europe's total non-EU maize imports. United States and Brazil also fill a little bit of that gap. However, the narrative is increasingly dominated by strict sustainability environmental mandates. Navigating EU import requirements, tracking compliances, and managing the fallout from shifting agriculture policies complicate the origination and elevate the cost for the entire feed industry. Europe must dynamically balance its strict regulatory environment with the absolute necessity of keeping its feed mills running. Third, the Middle East and Africa, the demand surge. While when we go up north in Africa, that is Middle East and North Africa region, we'll find that the predominantly demand of close to 34 million metric tons is the yellow maize. While sub-Saharan Africa, which use maize for food, it's more or less white maize. We are also seeing the challenge there because this is where the Black Sea is competing with the Latin America. And that is what makes this whole equation in MENA region pretty interesting. This is where the daily battle to secure consistent affordable supplies from a fractured global export market, which is forcing them to constantly pivot between the multiple origins. The day of relying on lagging monthly reports to make multi-million-dollar procurement decisions are over today. Navigating this extreme volatility requires elite ground-level foresight. We are going to exert that foresight right away with some of the excellent expert panelists which we are having today. These are the people who are involved in origination, who manage volatile cross-border physical flows. They are analysts who decode nearly on daily basis the geopolitics, the regulatory aspect, and they are the commercial leaders who are forced to execute large-scale procurement amid the chaos. Our mandate for this session remains the same. No scripts, no filters, pure intelligence. We are going to dissect EMEA feed metrics, analyze true execution risk out of Black Sea, and uncover the critical arbitrage opportunities hiding within the current supply chain disruptions. To our live audience, use the chat, engage with the data, and prepare to rethink your coverage strategies. The market does not wait, and neither should you. It's time to secure that strategic edge. Welcome to Commodity World, Week World 2026. Let's officially open the Maize, Europe, Middle East, and Africa War Room. I would invite my first speaker, Ishan Bhanu. Ishan is a premier agricultural market analyst currently serving as lead agriculture commodities analyst at Kaplan in London. With over 12 years of high-level experience in researching and trading global grains, including significant tenure at Olam International and InVivo, he is an expert in balance sheet forecasting. He specializes in synthetic physical trade signals into clear supply and demand data, helping institutional trading clients navigate complex EMEA and global macro trends. Welcome, Bhanu. Looking forward to have excellent time understanding from you. I think you want to go with the presentation, right, Bhanu?
Yes, absolutely.
Please,
Thank you.
Please, floor is yours.
Thank you very much, Deepak ji, for having me. When we discussed this conference and signed up for it, we didn't realize that the Strait of Hormuz crisis would still be relevant. But here we are. So I thought maybe we could start with some of the good data we have on what's happening there, and then look at the maize S&T scenario. So I'll jump into what we see in the Strait of Hormuz directly. This is our Strait of Hormuz crossing dashboard, and it starts just a couple of days before the war started. So at that time, we are seeing about 20 vessels. And this is for dry vessels, not liquids. And, all the media focuses around crude movements and liquid vessels exiting or mostly exiting the strait. We are looking at dry vessels today because that's what's important for grains, oilseeds, fertilizers. And fertilizers is quite important. I'll come to that. So at around 20 vessels a day before the war started, we are seeing very low numbers even in recent days. So we saw a spike of 6 vessels last week in a day, but we're back down to 1 to 3 vessels a day. It's not open by any means. Also, if we dissect this further, we're seeing, for example, the 3 vessels there all were headed to Iran. So for GCC countries, the Gulf is really not open for imports. So how have they adapted? We look at grain flows and then fertilizer flows. If we look at grain flows to the region, it's a major importer. If we look at grain flows to the region, the flows through the Gulf ports have dropped naturally. So if you look at Saudi's Dammam port, you can see that in February it imported about 550,000 tons of grains, and it has gone down to close to zero now. However, if you look at something like Yanbu, which is on the west coast of Saudi and the Red Sea, imports have increased. So this is true of Fujairah as well. If you look at it, it doesn't show up in the top 10, but it's true of Fujairah as well. So Jabal Ali volumes have dropped and Fujairah volumes have increased. So the countries in the Gulf are moving their imports to ports outside the Persian Gulf, mainly the west coast of Saudi and Fujairah in the UAE. However, volumes have not been volumes overall have gone down, and the countries are the non-Gulf ports are being adapted and being used more, not just for grains, but for everything else. So there's a capacity problem there, but they are managing. If we look at what will happen in the next few days and how they're managing, I mean, the Saudi wheat tender from last month was a good indicator that they're preparing for not being able to use their East Coast ports, especially the Dammam. So if you look at this is a map of all grains and oilseeds headed to the region, so headed to GCC, Iraq, or Iran. And here's a train of mostly corn vessels going from South America to the GCC. The shortest route from Brazil or Argentina is through the Cape of Good Hope to the Middle East. But these vessels are still going up north through the Mediterranean because they want to call on West Coast Saudi ports and not go through the Bab al-Mandeb Strait and have the risk of Houthi attacks there. The other interesting fact we see here is a number of vessels in the Arabian Sea not sure what to do. So some of these vessels have been just waiting for good news. Maybe they can enter the strait, or waiting for an alternate port like Chabahar in Iran or Fujairah in UAE to discharge their cargo. So let's see. If you look at the past track of some of these vessels, yeah, so this is a vessel carrying soybean meal to Iran, and it's been hanging out in the Arabian Sea for a while. Another very interesting thing happening here is that some of these vessels who are not interested in the additional risk associated with the Gulf, they are transferring their cargo, ship-to-ship transfers off the coast of Gujarat to sometimes smaller, older vessels which might have low insurance premiums. And the large vessels would continue doing the South America Asia shuttle, while the smaller, older vessels do the last leg and take the cargo from west coast of India, then into the Gulf. So we're seeing some of that happen as well. And yeah, so this is how the grains market is reacting to make the imports possible and continue it for the Middle East markets despite Hormuz closure. So yeah, buying activity has continued, but imports have slowed down a bit and moved to non-Gulf ports. So that's on grains. The imports have been impacted, but alternatives are coming out. Now, if we look at fertilizer, the we are all grains people here, but how I explain it to some macro clients and crude clients is that fertilizer out of the Gulf is very similar to crude out of the Gulf. It's about 20% of global flows. So if you look at this is a chart of fertilizer exports globally, and if you look at the Middle East Gulf, this is the share. This is an annual chart. So it's about 18 to 20% of exports. And if we split this by type of fertilizer, you'll see that the largest one here is sulfur and then nitrogen fertilizers. Sulfur is a key ingredient in sulfuric acid for industrial application, but also a key ingredient in making phosphates. So the closure of Hormuz affects both nitrogen and phosphate fertilizers, NNP out of the NPK. And the nitrogen fertilizers out here is mostly urea that comes out of the Gulf. This issue has not been solved. There is no urgency to build a fertilizer pipeline or a dry pipeline across Saudi to export more out of the West Coast or in UAE to export more out of the East Coast. That is not a priority. Energy is a bigger priority, and the second is securing imports. So the fertilizer issue globally has not been solved, and it is seen in higher fertilizer prices. So and visually, if you look at this map, this is all the fertilizer vessels in the world with that position within the last 2 hours. And if we look at what's happening in the Gulf, when the war started, there were a large number of regular vessels in the area here to load fertilizers because obviously it's a very large exporting region. And since the war has started, all these vessels have continued their operations. So they have loaded fertilizers, but they're not able to exit. They're bottled up in the Gulf. So the number of fertilizer vessels just hanging around in the Gulf loaded with fertilizer is very large. It has never been this high, and they're just waiting for their chance to exit the region. If you look at a past track of some of these, you'll see that these vessels have been here for a while. This one, for example, loaded on 18th of March at Jubail with urea. And since the 18th of March, it has been in the Gulf, not being able to do much. So if we look at the number of such vessels in the Middle East, we see that there are about 50 vessels. A few have exited in the last couple of weeks, but historically speaking, we have never seen this number of vessels carrying fertilizer in the region. And if I move to deadweight in terms of tonnage, this is about 2.5 million tons of fertilizers in the Gulf of a commodity where global trade is about 35 to 40 million tons. So the fertilizer market is feeling this, and prices are up, especially N out of the NPK. And again, taking a crude analogy, in the fertilizer market, the second order effect here is happening. So in the crude market, imagine if US banned exports or reduced exports of petroleum because of high prices domestically. That would create a major issue outside the US, and it will increase prices outside the US. In fertilizer, this has happened. This is happening. So all of Russia, China, Morocco, which is a big phosphate exporter. Brazil, Australia, all these countries are tightening their exports and trying to protect the domestic fertilizer market, which creates a second order increase in price of fertilizer. So this increase in price goes into our balance sheets and in our base case assumptions. We've gone over some of this, but if we look at the chart on the right, this is GCC countries' grain imports via Strait of Hormuz and not via Strait of Hormuz. You can see how it has moved completely to outside Strait ports, but also reduced in the in the quantum of imports. And yeah, and the chart on the left reflects that the same thing hasn't happened for fertilizer exports. Exports have not have they kept up for a bit, but they are going to drop this month and have not seen the same alternatives being used like grains exports have. So let's see what this does for the crops that are growing around us. So firstly, in Brazil, the safrinha crop has a weather problem in addition to higher fertilizer costs. The dryness in eastern parts of Mato Grosso and Goiás are threatening the upside on yield in Brazilian safrinha crop. The forecast is also not that great. It stays a bit, it stays dry. Also in the Northeast states, which are a smaller producer, it is a little worse. The dryness is much more than most of Mato Grosso. When we spoke to our agronomists and weather experts, they say that it's not yet cause for alarm, and total Brazilian corn production estimates are still in the range of 135 million tons plus. But this is something which will change on a week-on-week basis because May rainfall and May moisture availability is key for Brazilian safrinha corn. Something we are keeping a close eye on and makes a part of our balance sheets. We are a bit conservative on the number. We are at 137 million tons for Brazilian total corn right now. If we look at the US, here is where we can clearly see an impact of higher fertilizer prices. First on area and then on yield. So firstly, on area, in the prospective plantings report that was published in March, the survey happened in the first couple of weeks of March. The war had started and some fertilizer prices were up at the point, but we don't think that survey included all of the farmers' reaction to higher fertilizer prices. And since corn has a higher nitrogen requirement than soybeans, which is a legume, our models, which now also include fertilizer prices, our models point at lower corn acreage than what the USDA has in the US. So the USDA is just above 95 million acres for US corn, but our number is close to 1 million acres lower than them. And we believe higher fertilizer prices will push farmers to grow more soybeans in the US. Similarly, when fertilizer prices go up, farmers apply less, and there is a maximum efficient curve along which farmers operate. So our models at today's fertilizer prices are running at, and let's look at this one. If we look at the chart on the right, fertilizer prices have actually come off a little, but this is just the North America benchmark. They've come off a little, and at today's prices, our models hint at a 2% reduction in base case yields compared to trend. Now, we are yet to see the weather for US corn, but weather has a larger impact than fertilizer use. So a good growing season can cancel out some of the reduction, but it reduces the base case and it reduces the maximum upside because you might get an 8% increase because of ideal weather, but that will be discounted by 2% because of fertilizer prices. So at the moment, our US balance sheet is tighter than the USDA, and our ending stocks for next year are tighter. Higher fertilizer prices will have these effects on different crops in June to August and September to December. I'll not go through this, but you can look at the slides later. And of course, always happy for you to ask questions now or through email. Now, another factor which probably isn't being talked about as much is the effect on the US-China trade deal on the corn market. And we believe this has the potential to be explosive for the corn market. So a couple of weeks ago, the US and China agreed that China will buy $17 billion of agricultural products from the US, not including soybeans. Now, we ran different scenarios and we could not come to a scenario where China meets this commitment without buying corn. In other words, to meet this commitment of $17 billion of ags imports from the US, China has to buy at least 8 million tons of corn this year in 2026. So either they will not meet the commitment, which is entirely possible, or they'll need to buy 8 million tons of corn. An extra 8 million tons of corn demand for the US will be very bullish for corn prices. It won't throw off the US balance sheet in disarray and it won't take ending stocks to very low levels, but it will still have a huge impact on price. And not just that, if we look at 2027, we'll need another 12 million tons of corn from the US to China in 2027 to meet the $17 billion number. And this is a very conservative estimate. As you can see, we have gone through the other ags imports into China, and we have conservatively increased those, maximized those in some places, for example, cotton, just to see the minimum amount of corn that China will need to buy from the US. And that's still 8 million tons this year and 12 million tons next year. That accounts for an increase in price, which, allows them to meet their dollar commitment with less volumes, but still 8 million tons of corn this year, 12 next year from the US. So US corn sales will be very closely watched, and any hint of sales to China will be explosive for the corn market. And then we have some more data on what's happening in China, but I'll get to the conclusion here. If we look at ending stocks of feed in China and major imports of animal feed products recently as well in the past, we look at patterns on when they did it, at what prices, from where, and we look at what's happening domestically in China in terms of their hog herd, in terms of their plan for next year, as well as domestic prices. All of it comes down to the fact that China doesn't need more feed. The increase in so China's domestic feed demand increased significantly in the previous decade, in the 2010s, and that encouraged increase in global production as well. Thinking about Brazil, US, but that production continued to increase in this decade as well, whereas the feed demand in China has not kept up at the same pace. So China doesn't need this extra feed demand, and if it were to still buy this amount of corn from the US, it is doing it because of politics. It needs something in return. It will spend the $17 billion, but it will ask for something in return. So, so a little disrupted grain trade to the Middle East, higher fertilizer prices globally, no end in sight. The fertilizer problem is still not solved. It'll have an effect on crops. We looked at the effect on the US crop. The effect will also be felt across northern hemisphere spring and summer crops. So I'm thinking rice in Asia. But if we stay with corn in Europe, um, the same fertilizer prices will have a similar effect, a 2 to 4% reduction in trend yield. And again, we have the whole next 3 4 months of weather to play out. So the and one standard deviation of weather impact is much larger than one standard deviation of fertilizer price impact. So weather can change things. However, our base case assumption remains for lower corn, both lower corn acres as well as lower corn yields across the northern hemisphere. Less so as we go east because in Ukraine and mainly in Russia, fertilizer prices have not reacted at the same level. But in Europe, definitely we'd expect them to be a larger importer of corn next year. And if you're looking at futures markets like we do, we've seen the soybean corn price ratio increase in the past few weeks, and we remain bearish that given the new news of possible Chinese interest in corn, as well as expectation of lower corn acres in the July acreage report. So I that's a bit of a few varied topics, but I hope that was interesting, and I'm happy if you have any questions.
No, Ishan, excellent presentation. Thanks a lot. Would it be possible for you to stop the sharing of presentation so that we can have
Yes.
some question Q&A?
Yes.
Okay, awesome. So thanks first of all, for such a elaborate and timely presentation. You touched upon some very important aspects. Definitely, fertilizer is key, and we all know that actually weather deviation is 1.5 times more stronger than when it comes to fertilizer deviations. So very rightly mentioned that actually we also see a crisis happening in the weather as well. We are seeing drought like situation for 70% of crop in US. We are seeing up north in the European Union as well as Black Sea area also. The weather has not been that kind. And El Nino is taking away our own sleep, right, in Asia. Coming to European Union and Europe in general, when you say that you're seeing a short crop there, so do you think their import demand from 19 million metric ton could swell to something around 23, 24 million metric tons? Do you see that happen?
Yes, absolutely. That's our base case. Um, Not quite 25 plus, but close to 25 million tons. Yes.
Right. So we are looking at another 5 million metric tons going to, or 6 million metric tons going there. We are also seeing the challenges in MENA region. While demand has been, as you have rightly pointed out, because of the choking of the Hormuz, right? The transit is not happening, but eventually, the demand doesn't go, they'll find some other ways and route to get the material there. And they're also 34 million metric tons to 36 million metric ton is general demand. And we are seeing possibility of that remaining there. That will also add up. And when you add the sub-Saharan Africa, where actually the possibility of El Nino impacting the East Coast, right, white corn, right, crops, and leading to lower productivity. While fertilizer is not much used in Africa, but even in large captive farms of South Africa and Zimbabwe, where the fertilizer is used, they also see a challenge in the crop. So overall, do you see that the tightening of what typically whether it's USDA or IGC is predicting of maybe 20 million metric ton short, it could be far more severe than that?
Yes. So the Middle East, we have not changed our demand assumption at all. On an annual basis, we believe they'll solve the import issue. In Africa, even if you look at the trend increase, that adds to import demand because it's an increasing demand continent. And yes, El Nino will have effects on overall food production and import demand all the way from Kenya down to Mozambique. and South Africa, where exports might be affected. So yes, we do see an increase in demand overall on when we look at the global trade matrix, and we do see so our major exporter ending stocks are down about 24 million tons year on year. Um, but they are still much higher than 2 years ago and 3 years ago. Yes, they are lower than last year. For example, if we look at Ukraine, if you speak to Ukrainian exporters, they've not been able to export because of price last year. I mean, until February, US corn was the cheapest corn in the global market for 18 months running. Only in February, when Argentina came into the market, it quoted lower. But Ukraine wasn't able to compete even to nearby destinations like North Africa. So some of it would be good news for exporters, especially in Ukraine. Um, Overall, we don't see a volume issue. Like the global stocks and production this year will be enough even for our demand increases. But we do have the strong threat of a significant price increase if China come into the market buying US corn.
Perfect. Uh, Thanks a lot, Ishan. It was really pleasure of having you and share such a beautiful insight. Like you touched upon all critical points from fertilizer to the choke, right? And I would say that's not just choke, it's a choke slam. It seems like with every day the timeline moving, right? And then you rightly also pointed there is a possibility of US eventually maybe by August, right? Saying that actually I don't have much of crude and petroleum left for rest of the world because now I have to take care of my own reserves and my own fuel security. So and then as you move closer through the elections, they would not like the fuel price to go from $4.50 a gallon to six and a half or even seven. So I think there would be another I would say shrinkage of supply there. So I hope things doesn't look so great, but let's be hopeful. The God would be kind to all of us and solve this problem. Human beings have been very resilient species, and I think we'll come out of it with little bit of bruises, but surely we'll survive. Thanks a lot, Ishan. It was a pleasure having you, sir.
Thank you for having me.
Thank you. So now we move to, we heard there are a lot of challenges when it comes to supply from the biggest granaries of the world when it comes to corn. That's America and South America and the US. And even we see some shortages coming also in another big producing region, which is of Black Sea. And if we find some shortages in Europe, the things can spiral out of, I would say the problems would be deepened. Now that brings out another aspect. Can India chip in, right? Because we have been projecting, while not everybody agree, that government is projecting that between 51 to 53 million metric tons of corn production is possible in India, while our requirement has not been that much as of now. So can India be a little bit, I would say, saving grace for rest of the world by supplying maybe 3 to 4 million metric tons of additional corn? Is parity going to work? For that, we are having someone who has been working on ground at the grassroots level. So I would like to welcome Mr. Bimal Bingani ji. He is an accomplished corporate executive and international merchant, currently serving as managing director of Bingani Group, with a strong track record in cross-border trading and physical commodity flows. He specializes in origination, financing, and delivery of grain across key global corridors. His extensive expertise lies in strategic business development, risk mitigation, and navigating complex supply chain environments to build resilient trade networks connecting major producer nations with high demand regions. He will give perspective from ground on viability of India serving any of EMEA markets. Welcome, Bimalji.
Thank you, Deepak ji.
So Bimal ji, पूरी दुनिया के अंदर त्राहिमाम हो रहा है we are not having availability, right? And can India be having the possibility of providing corn to the world? क्या दुनिया के अंदर भारत मक्का दे सकता है?
भारत में जो अभी इंडिया के प्रोडक्शन की आप बात कर रहे हैं 53 मिलियन टन, ये तो हो ही नहीं सकता, क्योंकि ये मक्का होते तो प्राइसेस इतने ऊपर नहीं आते।
सर ये सरकारी नंबर है सर, मेरा नंबर तो बहुत कम है।
हाँ, सरकारी नंबर है। तो अभी अपना जो प्रोडक्शन है वो तो 44 मिलियन टन के आसपास ही है। और अभी हिंदी में रहेगा ना आपको कंफर्ट की
हाँ
इंग्लिश में
हाँ सर, सर जो जो भी आपके लिए कंफर्टेबल हो, इंग्लिश और हिंदी, वट एवर इज कन्वीनियंट, कोई प्रॉब्लम नहीं सर।
तो अभी जो मक्का का सीन है अपने यहाँ, जो मक्का है अभी जो हमने करीबन 2 मिलियन टन, 20 लाख के आसपास हमने एक्सपोर्ट कर दिया है। और शायद बांग्लादेश के लिए 10 लाख और भी अपने कर देंगे। 30 लाख टन का ही एक्सपोर्ट अपने यहाँ से हो सकता है, उससे ज्यादा एक्सपोर्ट का कोई गुंजाइश नहीं है अपने यहाँ से। तो अपना जो रवि का जो प्रोडक्शन आया है वो गवर्नमेंट के फिगर भी डाउन है, और अपने भी देख रहे हैं कि में जो पोजीशन है अराइवल सब जगह काफी कमजोर है। प्राइसेस भी नीचे से जो 15-16 रुपया, 17 रुपया केजी थे वहां से बढ़ के सभी मंडियों में 20 रुपया के भाव हो गए हैं, 20 रुपीज पर केजी के भाव हुआ। बांग्लादेश अपने नियर में है, वो हमसे जरूर लेगा, 1 मिलियन टन के आसपास जरूर ले लेगा। अभी ओवरऑल अगर इंडिया के मक्का की बात करें तो इंडिया में जो ये जून का महीना है जब यूपी की और पंजाब की क्रॉप आएगी, उस टाइम में थोड़ा सा एक 20-30-50 रुपया पर क्विंटल का डाउन आने का चांस है। 15 जुलाई ऑनवर्ड हमको ऐसा महसूस हो रहा है कि खरीफ क्रॉप आने से पहले अपने इंडिया में ही मक्का की शॉर्टेज हो जाएगी।
Perfect. So what Vimalji is saying is that India might eventually end up having possibility of exporting close to 3 million metric tons, out of which a million metric ton might only go to Bangladesh because of land border trade. And other than that, more than just hardly 2 million metric ton is possibility. Also, India might end up having a shortage. So Vimal ji, अगर भारत में shortage अगर होगा तो दुनिया भर में मक्का नहीं है। और हम तो इथेनॉल बनाने की कोशिश कर रहे हैं, फिर फीड इंडस्ट्री है, फूड इंडस्ट्री है। इस सिनेरियो के अंदर अगर शॉर्टेज होता है तो आपको लगता है कि सरकार 2 या 3 बार सोचेगी वापस, जो 22% इथेनॉल, 30% इथेनॉल, ये सारी जो कहानी की जा रही है, अगर हम अभी से ही शॉर्टेज देखने लग जाएंगे तो सरकार 2030 तक तो थोड़ा सा 3 बार सोचेगी इथेनॉल की ब्लेंडिंग बढ़ाने का। आपका इसमें व्यू क्या है सर?
देखिए, इथेनॉल के जो ब्लेंडिंग बढ़ा रहे हैं ये तो गवर्नमेंट का है कि भाई फॉरेन करेंसी को हमको रोकना है, इस बोल के पेट्रोल में इथेनॉल बढ़ाएं। रहा मक्के की जो शॉर्टेज देखते हुए, अभी आपको पता है पीछे 20 लाख टन गवर्नमेंट ने एडिशनल चावल दे दिया इथेनॉल वालों को। 52 लाख टन जो दिया था दिया, उसके बाद में 20 लाख टन एडिशनल भी दे चुके हैं। तो ऐसा अगर ओवरऑल देखें तो अपने यहाँ राइस का बहुत ही बड़ा स्टॉक है, वीट का बहुत ही बड़ा स्टॉक है। वीट में अभी आप देखिए 5 मिलियन टन ज्यादा प्रोक्योरमेंट हुआ है लास्ट ईयर के कंपैरिजन में। तो वीट भी हमारे यहाँ ज्यादा है, हमारे यहाँ रेट ज्यादा है। एक्सपोर्ट का गवर्नमेंट ने कोटा दिया है 50 लाख टन का, लेकिन अभी तक हमको नहीं लगता है कि 50,000 टन भी एक्सपोर्ट हुआ है। मेन इंपोर्टर बांग्लादेश रहेगा, जो कि बांग्लादेश में अभी पेरिटी नहीं है। अभी यहाँ से 100 रुपया वीट में डाउन होंगे तब बांग्लादेश पेरिटी आएगा, या इंटरनेशनल प्राइसेस हाई होंगे तब पेरिटी आएगा। बांग्लादेश में $245-250 का काफी वीट आया हुआ है, जो कि अभी बिक रहा है। उनकी लोकल क्रॉप भी 10 लाख टन की थी, वो भी बिक रही है। पिछले वीक से पहले तक इंटरनेशनली थोड़ा वीट प्राइसेस बुलिश हुआ, $285-290 तक गया, लेकिन अभी जो खबर मिल रही है वहां से फिर वापस डाउन आ रहा है। तो ये सही है गलत है ये आप ज्यादा जानते होंगे इंटरनेशनल का, तो वो नहीं पता है। और वीट अपने यहाँ से एक्सपोर्ट होगा, जुलाई अगस्त ऑनवर्ड वीट एक्सपोर्ट होगा, जिसकी दरकार भी है, क्यों गवर्नमेंट के पास गेहूं रखने की भी जगह नहीं है। आई थिंक ओएमएस भी जुलाई से चालू कर देंगे। आज उनका पुराना 30 मिलियन टन स्टॉक अभी 35 मिलियन टन का नया हो गया, 65 मिलियन टन। उसको रख रखाव करने में खर्चे होते हैं। फिर लस्टर लॉस जो वीट उन्होंने खरीदा है वो तो आने वाले 1 साल में खराब होने के चांसेस रहेंगे। तो गवर्नमेंट इसका डिस्पोज ऑफ करने की तो प्लान करेगी, भले ही रेट में थोड़ा कम रेट दे फ्लोर मिल को ओपन सेल के अंदर में। तो वैसे फूड का अपने यहाँ देखें तो मक्का और गेहूं में अपने कंफर्टेबल है, लेकिन वर्ल्ड को बहुत ज्यादा खिला सके ऐसी पोजीशन अपने इंडिया में नहीं है। जो 50 लाख टन गेहूं का दिया है वो सफिशियंट है। 50 की लास्ट भी जब 21-22 में जब एक्सपोर्ट हुआ था तो टोटल एक्सपोर्ट ही 70 लाख टन हुआ। इतना बड़ा सब जगह से वेसल लोड हो रहे हैं, वो हो रहे हैं हल्ला गुल्ला होने के बाद भी। तो अपने यहाँ से जो वीट एक्सपोर्ट होगा 50 लाख टन मैक्सिमम एक्सपोर्ट हो सकता है। वीट प्रोडक्ट थोड़ा थोड़ा जा रहा है, वो भी बहुत ज्यादा नहीं जा रहा है। मक्के के अंदर भी अपने अगर एक्सपोर्ट कर दिए तो अपने इंडिया में रिस्क होगी, मक्का वापस 25 रुपया भी बन सकता है अगर एडिशनल अभी अपने यहाँ से 2 मिलियन टन, जो 1 मिलियन टन बांग्लादेश जाना है वो तो जाएगा ही, हमारे नियर कंट्री है उनको हम लोग दे रहे हैं $215-220 में दे रहे हैं। इंटरनेशनली प्राइसेस उनके $260 के हैं, तो वो हमारे यहाँ से ही खरीदेंगे, बाहर से नहीं खरीदेंगे। एक जो बोल रहे हैं यूएस में या ब्राजील अर्जेंटीना में जो वीट का मेज का बोल रहे हैं, अगर अभी बांग्लादेश जो है वो बाहर में बायर नहीं रहेगा, अभी मक्के में और गेहूं में दोनों चीज में बांग्लादेश जो इंटरनेशनली बाहर रहता था वो नहीं रहेगा या बहुत ही कमजोर रहेगा। क्यों? हमारा उसका लैंड बॉर्डर मिलता है, हमारा एफओबी और उनके सीएंडर प्राइस सेम होते हैं, दैट मीन्स कोई फ्रेट कॉस्ट है ही नहीं। तो ये जो सीनरियो दिख रहा है, अपने मक्का में बहुत ज्यादा एग्रेसिव होकर के अगर एक्सपोर्ट किए तो अपने इंडिया में तकलीफ आ सकती है।
Perfect. So as Bimalji rightly pointed out that India is having a serious shortfall ourselves, so chipping in and trying to export more of wheat and maize could be a challenge. And going forward, there is also a possibility that in case we aggressively export wheat or maize, especially in maize, we might end up importing at a higher price, exporting at the lower price and importing at a higher price. Very rightly mentioned, Bimalji. Bimalji, अब आखिरी क्वेश्चन विच इज वेरी इंपॉर्टेंट। तो सर ये अगर जो हमारे जो ट्रेडर है जो आज हिंदुस्तान में बैठा है, सो सर ये इतने अपॉर्चुनिटी होने के बाद दुनिया भर के अंदर जहाँ पे शॉर्टेजेस है मक्के की, गेहूं की, उसके बाद भी एक्सपोर्ट नहीं कर पा रहा है, तो ये सरकार जब कोटा देता है उसके साथ ऐसा कोई तरीका भी तो होना चाहिए कि हम एक्सपोर्ट कर पाए, क्योंकि हम नंबर तो बड़े बड़े देखते हैं, फिर सरकार थोड़े दिन के बाद जब उनको लगता है कि भाव बढ़ गए हैं और एक्सपोर्ट के चांसेस ओपन हो रहे हैं, तो जैसे शुगर का बैन कर दिया एक्सपोर्ट। सो एक एक इंडियन एक्सपोर्टर के लिए ये कितना डिफिकल्ट है इस तरह की पॉलिसीज को देखना कि जहां पे जैसे मौका मिलता है सरकार बंद कर देती है, जब मौका नहीं है जब सरकार कोटा देके छोड़ देती है।
इस मामले में जो है ये जो सरकार जो एक्शन लेती है उसके पीछे कारण क्या है कि पहले अपने देश का खाना पूरा करें उसके बाद करें। लेकिन इसमें मेरा एक सरकार को एडवाइस भी रहेगा कि जो अचानक हम कोई भी चीज को बंद और चालू करते हैं उसमें इंटरनेशनल मार्केट में हमारी गुडविल बहुत खराब होती है एज ए एक्सपोर्टर और एज ए कंट्री। तो इसका सबसे अच्छा तरीका क्या है, जब भी हमको एक्सपोर्ट नहीं करना है, सपोज कीजिए हमने मक्का का एक्सपोर्ट ओपन कर रखा है, हम अभी देख रहे हैं हमारे यहाँ प्राइसेस बढ़ रहे हैं, ठीक है आप एक्सपोर्ट ड्यूटी लगा दीजिए, बट एक्सपोर्ट बंद किए खोल दिए, बंद किए खोल दिए, ये नहीं होना चाहिए। ये होने से थोड़ी ज्यादा तकलीफ होती है। जैसे ओनियन में ही है, एक्सपोर्ट ड्यूटी लगा देते थे, तो उसमें क्या है, एक्सपोर्ट अगर कोई भी इंटरनेशनल बायर लेता है तो सरकार को भी पैसे मिलते हैं और थोड़ा सा रेट भी उनको ऊंचा मिलता है और हमारे इंडिया के कंज्यूमर को कम रेट में मिलता है। तो ये एक पॉलिसी जो खोलना बंद करना है, ये इनफैक्ट हमारी एक्सपोर्टर की गुडविल और एज वेल एज इंडिया की भी गुडविल थोड़ी खराब होती है। इंटरनेशनल बायर उतने कॉन्फिडेंट नहीं होते हैं, हमको ऑर्डर देते हैं तो उसमें थोड़े उनके मन में रहता है कि भाई कब बंद हो जाएगा। दूसरा, अपने इंडिया के जो एक्सपोर्टर है वो क्वालिटी मेंटेन करना नहीं जानते हैं। आप हमको बताइए इंडिया का ब्रांड इमेज क्या चीज में है? आज हम मक्का एक्सपोर्ट करो, वीट एक्सपोर्ट करो, जहां भी हम एक्सपोर्ट कर रहे हैं वहां से जो इंपोर्टिंग कंट्री है वो कुछ ना कुछ कंप्लेन ही करती रहती है। इसका मतलब हम लोग क्वालिटी में नहीं जाते हैं, हम उसको प्राइस कैसे कम कर पाए क्वालिटी डिटोरिएट करके, ये अपने इंडिया की गुडविल को खराब करता है। आज मैं आपको एक एग्जांपल बताता हूं, 2021 में सोयाबीन डीओसी बांग्लादेश से इंपोर्ट हुई थी और हमसे वो बहुत कम ग्रोथ का कंट्री, हमसे बहुत नीचा है, लेकिन उस सोयाबीन को आज भी हमारे ईस्टर्न रीजन या कोई भी रीजन में आज भी उसको याद करते हैं कि क्वालिटी बहुत परफेक्ट थी। हमारे यहाँ सोयाबीन बनाते हैं तो उसमें 2% सनसिलिका है, तो इसका मतलब 2% मिट्टी मिला दो उसमें, तो ये तो गलत है। आपको मिट्टी तो पहले निकाल के आप बढ़िया माल दोगे, आपको प्राइसेस मिलेगा। तो एक्सपोर्ट में ये सबसे बड़ा चैलेंज है कि हम इंडियन एक्सपोर्टर, हमको बोलते हुए खराब लगता है, मैं भी एक्सपोर्टर हूं, लेकिन हमको क्वालिटी कॉन्शियस होना चाहिए हम प्राइस उससे तभी डिमांड कर सकते हैं जब हम क्वालिटी मेंटेन करें। ये एक एक्सपोर्टर के मेंटेन करने से नहीं होगे, ईच एंड एवरी आदमी को क्वालिटी मेंटेन करना पड़ेगा, तब हमारी इंडिया की क्वालिटी या उसका ब्रांड इमेज बनेगा और हमको अच्छे पैसे मिल पाएंगे। और गवर्नमेंट का जो है ये थोड़ा सा चैलेंजिंग है। इस चैलेंज को अभी मक्का है तो मक्का अभी हमारे यहाँ से जाने की कोई कॉस्टिंग भी नहीं है। वीट ने ओपन किया, 50 लाख टन ओपन किया, लेकिन हमारे यहाँ तो दो प्रॉब्लम है। सरकार चाहती है किसान को हम ऊंचा दाम दें और कंज्यूमर को कम रेट में दे, तो उसका तो एक ही है भाई, सब्सिडी दो। तो हम अगर एमएसपी रेट हमारी ऊंची है, वर्ल्ड से काफी ऊंची चल रही है, आप 50 लाख टन का परमिशन दिए हो, तो एक्सपोर्ट होने का चांस कैसे रहेगा? वर्ल्ड मार्केट से कभी तो हम बहुत ऊंचे चले जाते हैं और कभी हम बहुत नीचे आ जाते हैं। जैसे मक्का 15-16 रुपया हुई तो वर्ल्ड से भी हम काफी नीचे हो गए। तो ये अपने रेंज नहीं बन पा रहा। उसका क्या मैकेनिज्म होना चाहिए, किस तरह होना चाहिए जिससे किसान को भी फायदा मिले और खेती को बढ़ावा देना ही मेन है। भारत एक कृषि प्रधान देश है और इसमें अपने इनकम का मेन सोर्स ही कृषि का है। जितना एग्रीकल्चर ग्रोथ करेंगे उसमें है। अभी जो पल्सेज में भी है, जो अपने ऑनरेबल प्राइम मिनिस्टर नरेंद्र मोदी जी बोले हैं कि 2030 तक हम आत्मनिर्भर बन जाएंगे। तो आत्मनिर्भर कैसे बनेंगे हम? अगर एमएसपी से नीचे दालें बिकती रहेगी तो किसान क्यों उपजाएगा? और इंपोर्ट का इतना माल अपने यहाँ पे आएगा तो कैसे होगा? तो ये बहुत मैंने बहुत बड़ी चीज है डिस्कशन की, गवर्नमेंट लेवल पर चिंतन करने की, गवर्नमेंट लेवल पर डिस्कशन करने की। इसका एक अच्छा रूट निकाला जाए, अच्छा लाइन निकाला जाए, जिससे कि हमारे किसान को भी अच्छा दाम मिले, कंज्यूमर को भी अच्छा रहे और इंपोर्ट एक्सपोर्ट करने वाले को भी आराम रहे।
Perfect. Thanks a lot, Bimalji, for your intervention. So, as Bimalji rightly mentioned, that first thing is that the government sudden decision of opening or closing of export doesn't work well. Maybe they only have on and off switch. They should have a switch in between as well, where they can use export or import duties to control the trade rather than actually taking the extreme decision of either banning or opening or putting in restriction of any of the export or import. At the same time, also for exporting to countries, specifically when we talk about a stringent regulation for countries like European Union, our exporters need to pull their socks up and focus on quality, because quality has always been one of the challenge. And there have been a lot of complaints in past, whether it is about soybean or whether it is about maize or even other staples like wheat. With that, thanks a lot, Bimalji, and it's a pleasure having you, sir, for giving a very important perspective कि भारत देश भी शायद अच्छा एक्सपोर्ट कर पाए फ्यूचर के अंदर, if government take policy decision with little bit of heart. At the same time, we also ensure that our exporters, they understand the value of quality when it comes to food. Thank you, sir.
Thank you very much. Thank you very much for organizing this online commodity week.
No, sir, my pleasure, and thank you for supporting us.
Okay, good, thank you.
Yeah. So now I go to our next speaker, and from the numbers, right? More on fundamentals. Let's delve into another art, and we are having the world-renowned market expert, Mr. Eddie Topwick. He is an expert serving as head of technical analysis and senior market analysis at ADM Investor Service International. He's
Hello,
I
how are
would
you?
say, I'm good, sir, and it's a pleasure to be sitting next to a legend, maybe virtually, right? It's such an honor. So with 40 years of trading for experience, he's leading authority on technical charting, risk management, and market psychology within the agriculture and foreign exchange sector. As chairman of Society of Technical Analysts, he is highly celebrated for his ability to translate intricate financial data and price action into practical hedging strategies. And we all know that how important hedging is today. And I would say, sir, it's a complete honor. So Addy, me on the same screen with you gives me goosebumps, right? And
It's an honor for me. It's an honor for me.
Thank you. Thanks a lot from my heart for joining us. So Eddie, straight away, very important question. You know that we are living in a very extremely fundamental volatility, right? And how do you see the technical charting and price action must be interpreted in current agriculture market and with the global context?
Right. Well, there's two things I want to say. First off, I know this is a family audience and you're using the word fundamental, the F word, as I call it. It's be careful of the use of the F word. I don't necessarily agree with that. But secondly, volatility, yes, when we're having volatility now, not as much as we had earlier this decade, but we are having volatility at this moment. But the greater the volatility, the more easier it is for the charts to be interpreted.
Awesome, Adil. To totally agree with you. Like, this is where actually it becomes very important. I would also delve a little bit onto it. Like, see, in the markets, when we talk about the global south, hedging has not been seen something of like, hugely used, right? The price discovery is totally absent. For example, I give you example of my own country. I don't have any futures and option possibility. My all
Yeah.
discovery happens actually physically. And this is where actually like, hardly a data is collected, which can give you like, a going forward strategy. How do you see in such market, like, to take care of such type of scenarios and lean into like, technical analysis to at least be able to do something on physical market so that actually we don't burn our fingers?
Okay, technical analysis relies on three things: price, which is the most important, volume where it's available, and open interest when it's available. Now, in some of the markets, the developed markets, such as in Chicago for corn and for wheat and for the other agricultural markets there, and also in Europe, and even in Asia with bursomalacious palm oil, you have those three factors. You have them in there. But the most important is price. And if you have a price, even if it's a closing price, a notional price, you can draw a chart with that and you can use some of the tools for technical analysis in that. It's all available there if you wish to use it. Now, hedging. This is a question I put to you and to all of your audience. If you're not hedging, then you are speculating. Simple as that. You are taking a view on the market unless you are hedging your exposure. Now, it may be a percentage that you hedge. It may be 30, 40, 50, 60, 70, 80%. But the balance which you're not hedging is speculation. And there is no doubt of it. It's a binary thing. If you're not hedging, then you are speculating. And if you don't have that ability to be able to hedge, then you can use proxies for that. I personally have always looked at Chicago corn for the maize market, and because it gives a global idea of what prices will be there. But then you can also look in other markets in that area that can help you in one way or another. And data is available. Some of it is limited. You have to pay for it. But there are private organizations which give you data of their prices for that area. But it's really important to understand that unless you hedge, you are speculating in the market. And it's a question you have to have in your mind. Am I an agricultural processor? Am I a cooperative? Is that my business? Or is it speculating in the market? Is that my business? And I would add that it's not in your interest necessarily to be a speculator. Speculators are there to take on the risk from you as a producer. The whole purpose of a speculator, and I absolutely agree they should be there, they take on the risk between the producers and the consumers. They take on that risk for a price, but they take on that risk between those two. So I actually think, yes, you have problems maybe with being able to find data for whatever market you're involved in, but it is essential to use that data when you have it to draw a chart and to be able to use tools on that chart to be able. And the more volatility there is, the better, because when we had the big Russo-Ukrainian war and we saw wheat and oilseed prices and veg oils go through the roof, everybody was coming back to me saying, we've never been up here. We don't know what the F word is for this. We don't know what to do in the F word. What do you say, Eddie? And I said, oh, it's very simple. There's a pattern here. This is what it'll mean. This is how high it will go for the next resistance. And things like that happened. And they said, what happens now? Well, if this is reached, then there is this pattern. And that's how you develop it. You build it with basic blocks and you build higher and higher and higher and you grow that way. And that's how you use technical analysis.
Awesome. So, Adi, one more very important question. Like, see, off late, we are seeing the patterns today. They are too different than what has happened in the past, right? You are having a state head giving misinformation day in and day out, right, on social media, and the market reacts to that, right? We have seen from $105 a barrel, right, to $89.8 a barrel, just because we thought something was going to be signed, and only one person was knowing that whether he'll be signing or not, and it never got signed, right? Now, again, we are in the cycle that the crude started going up, creeping towards 94. And again, next 2 to 3 days, if nothing happens, then it goes back above 100. So in this scenario, right, the fundamentals definitely are failing. But do you think that there is some, I would say, safeguard in technical analysis to even see to these type of volatility also?
Yes, very much so. We are trading in crude oil. We're trading within a very wide range. And I'm using Brent usually because that's the one I look at most of the time. But we have a specific range that we're trading in between. And we're moving up and down within that range. We've not broken higher and we've not broken lower. And that's really important because when we break in whichever direction, and you please be careful, there can be false breaks. But when we break in any direction, then the move will be even higher or even lower. It will be much more violent because we're trading within a range and there is tension being built up in that range. So yes, you can look at it and you can say, okay, you can range trade. You can, if it dips down towards the low, you can buy. If it dips up it goes up to the high, you can sell. But make sure you put stops in on either side to protect yourself.
So, Eddie, actually, smart people make money when there is chaos.
Smart people make. I'm going to quote you, Nathan Meyer Rothschild, who was the very famous founder of the Rothschild banking dynasty in the UK. And I was in their offices. I used to do the gold fixing for one of the fixing companies in London, and I saw the bill they had for the Battle of Waterloo in 1815. And Nathan and his death mask as well. And one of the things he said was, when there's blood on the streets, buy property. There's always an opportunity when you can see something in there, when you can quantify where the markets are moving, and the charts do that for you. When you go beyond what other people say, oh, there is nothing behind this that we can help with because social media and this, you're always using excuses. There are always excuses. There's always been something. There's always been bad social media. It's just been a lot slower. There's always been people who've been on inside of market and trading. I've got a book behind me, Reminiscences of a Stock Operator, by Edwin Lefebvre, which is the story of Jesse Livermore. He was the big short in 1929. The big short. In 2 weeks, he made $100 million back in 1929. And he was using technical analysis, amongst other things. So the whole point behind it is there's always that sort of thing happening. And I think we're living in less volatile times, relatively, than we have done in the past, especially earlier this decade.
Perfect. Eddie, one more thing, let me give my audience a little bit of a possibility of making money because of you being here. How do you see, bullion? Because when we looked at those charts in bullion, right, silver still looks highly underpriced. Do you agree with that, or do you have different views on that?
Well, can I share a chart? Am I allowed to share a chart on the screen?
Yeah, please,
Okay,
all yours, sir.
let me just put up I'm going to do two things. My silver chart is not updated as much as my gold chart, but I'm going to put my gold chart up and I'm going to share it with you. Just bear me, let me get it up here, because I had corn up there in Chicago. This is a complex one. It's got a lot of notes on it, but I'm going to make it simple for you. So bear me a second. I'm going to share this now.
For gold lust, we have all the time. Don't worry.
Here we go. Can you see that now? Can you see my chart?
So far, it's yeah, now we can. Yes, please.
Okay. This is the price of gold since August of last year. It's spot gold. It's not the futures market. It's the spot gold. I prefer spot gold for this. And I'm going to give you three definite things. There's a pattern here. And you can, I don't know if you can see my arrow. It's pretty faint, but there are three red lines which are pointing downwards. This is called a modified bearish shift pitchfork. It's a piece of technical analysis tool, which is about 120, 130 years old. I drew that back then at the end of February. And I said, this is where the market's going to start heading. This is the median line, the one it wishes to congregate around. But the outside lines are going to be this one here, which this happened a month afterwards. It dropped, 3/4 of a month afterwards. It dropped down there to also the long moving average. We had two pieces of big support, and then it bounced up, and we are now heading back down. Since February, the end of February, beginning of March, this market is heading lower at the moment. Now, the only thing is we're testing this long moving average, which is currently on spot market is at, where are we? 44.16. So this is being tested at the moment. Successive closes, consecutive successive closes on the, underneath that, say, so it's gradually moving higher. But if you have 2+ closes underneath that, it will test this and it may come back down to this level. That's the pressure on the downside. Above it, you can see all these lines, and this lines, they're acting as pressure on it. Now, the silver chart I'm going to switch to is not so highlighted. Right. Different story. The similar pattern here, and it's earlier actually. This is a bullish shift pitchfork, and it's dating from where are we? From this period here. So from December last year to the beginning of February, it is still showing a bullish undercurrent. The market is testing it. The support for silver at the moment is at 72.63. That's spot silver in dollars. So we're getting a pressure to push upwards, but we are testing it again and again and again. So there is a pressure to push it down. There's a monthly key reversal down here in March, which didn't follow through, but we're gradually eroding this pressure, but it's still on the upside. It's still pressure. So silver is actually moving away from gold at the moment.
Perfect. Perfect. Thanks a lot, Eddie. Any views on corn, sir? How do you see it moving? Like, people have been
On which
going
one? On corn.
Let
me shift. Corn? Yeah, let me put you on to corn. Bear me a second. I'm just going to move my chart over to that, and I'm going to share it now. This is really actually very interesting. I'll tell you what it is. Here we go. Okay, tell me when you see it.
Sure. Yes.
Right.
Yeah.
This 3 blue lines. This is a bullish shift pitchfork, and it dates from August through to January. This has been brilliant at showing the bullish angle of attack. I mean, I drew this back in the middle of January, and it's acted perfectly. There are no closes above it. There are no closes below it, except on Friday. Friday is the first day we closed below it. And so this pattern is now being threatened. This whole bullish identity from the beginning of this year till now is being threatened, and the pressure is on the downside. There are 2 things to bear in mind. The immediate pressure is this pattern here. This is called a double top. In fact, it's called an Adam and Eve double top. This pressure has already reached the primary target, which was somewhere around about 457, I think it was. I've taken it off the chart because it's already happened. The secondary, harder to reach target for bearish pressure for a double top is at 440.25. So we have potentially losing about 15 cents. 15 cents on this.
15 cents, yeah.
That's the immediate pressure. If we get further down, if we go below, say, about this long moving average, which is around at 447, then we can initiate this pattern, which is a bigger one, which is a bigger double top. There's one top there on the left, which is between March and April. And the second is the one we're talking about now, which is April to May. It's split, but that's the second double top. That pressure, if it goes down, well, that you're going to be looking at new lows for the year, if that happens.
Perfect.
Now, that's the short medium term view. Let me share with you my longer term view. So I look every year at the beginning, at the January, I look at every chart that I cover mainly, and I give a long-term analysis. And I'm going to give an analysis of corn. but in longer term analysis. There we go. Now, this is the Russo-Ukrainian war, the head and shoulders top pattern it's called. That's what we reached there, and we've reached the targets. We now have a double bottom pattern here. One bottom is in 2024, the second is in 2025. The target for that move is at 521. But this could be a target which is going all the way through to maybe next year. There is still pressure on the upside. The key question is whether the market will hold this line, which we are, where are we? We are at the moment for this line, we are testing at 417.25. So that's where the key level is. As long as we don't close, we can press it, we can push for it. But as long as we don't close below it for 2 months, 2 consecutive months, then the pressure will still be on the downside. You could come down to 417 and still push the price back up again. So that's the situation, and that's something just to be aware of. So that's the longer term pattern, and that's a multi-year pattern. I've got chart going back to 2010 there.
Awesome.
The shorter term one is I can see it going higher.
Perfect. Thanks for that, Eddie. So, Eddie, now coming to the last very important and vital question. There is so much of talk about artificial intelligence, right?
Yeah.
Some of the model we have been testing, like, they are pretty awesome, right? What AI was just 6 months back and what AI today is very different, right? I can unleash multiple agents to pull the data, right? Then I'm having an analyst agent, which actually keep on processing that data. And then I'm having a fundamental analyst who would be getting all the noise from across the globe, from Twitter, from Truth Social, and adding to it. Do you see that actually the technical analysts, will have to either adapt themselves to the modern tools, which is AI, or I know a lot of technical analysts who still believe that the human intelligence is far superior than artificial intelligence. Your views on this, sir?
Excuse me, I got a dry throat. Okay, I'm going to take you back. I started technical analysis about 1985. I used paper charts. I had a special special pencil, and I had special chart paper imported from America. And I drew charts. I covered about 20 markets, and I drew charts with a pencil every day. And I interpreted that move from there. I couldn't use many indicators because I would have to use a lot of sums to do that, but there were not many computers available in those days. So I covered 20 markets, maybe 25. Come now to today, I cover about 250 markets. In that time that's happened, I've gone from paper, pencil, scrolls of paper through to screen-based charting and covering 10 times as much markets as I did back then, very, very easily. I can bring up a chart on anything. I can bring up a chart on orange juice, on Ripple, on hogs, on platinum, on Brent crude oil, very, very easily, and I can do an analysis on that. I don't have to update it or anything like that. AI is going to give me the ability to be able to hopefully do 10 times as much. Instead of covering 250 markets, I can cover maybe 2,500. It gives me a much better thing. My employer loves it. The market likes it. The people who follow me like it. Where it's important is this. The ability that the computer did is it didn't make the decision. It didn't draw the chart. I drew the chart. I drew the analysis on it. And the same is for AI. It's a fantastic intern. It's somebody as an assistant to you, but the analysis is still mine. And the analysis will always still be whoever is the technical analyst. If you look and you use that, an AI as a technical analyst, then you'll have problems because it doesn't fully take into account all the details. It's a graduate student. It doesn't know the experience that you have. I was on a panel session 2 weeks ago in Serbia, and one of the panelists was an AI avatar. So it was the first panelist I've ever been on where there was actually an AI, and that AI is very, very good. But you will need to have that analysis then checked by a qualified, and I mean properly qualified technical analyst. There are a lot of people who are charlatans out there. So somebody from the Society of Technical Analysts or from the International Federation of Technical Analysts, if they have their qualifications, they can interpret that chart and give you the analysis you need, because you are going to be making decisions. Your company is going to be making decisions on the back of who? On the back of me, or a qualified technical analyst, or on the back of an intern. AI will be great to helping me, but it will not be great at actually providing that analysis. I still have to do that, because I know, for example, some of the analysis it was doing was incorrect. And I said that at the time. You know, there are so many ways that experience teaches you. In time, maybe it will. But the problem is, where is that scraping that technical analysis knowledge from? Where's it coming from? If it's coming from the internet, there is a lot of bad technical analysis out there. Bad charlatans, people who are crooks doing stuff. Unless you have a qualified person, which is either MSTA or CFTE or whatever local authority, society it is who has that membership, then I would not advise it. The important thing, and I was on a panel session at the beginning of May with in London for Commodity Trading Week, and there, one of the fellow panelists was the head of commodities for Diageo, the spirit makers, biggest Scotch makers in the world, all around the world, and other spirits as well. He said something very interesting, which I think is true. He said AI will get rid of a lot of consultants. You would normally, in the past, if you're an organization, a big organization, you would go and say, I need an analysis of this market. Here's £100,000, go away, come back and give me an analysis of that market. And the consultants would go away, they'd spend 2 months, maybe come back and you'd have an analysis. AI can do that for no cost, really, and can do that within half an hour. That's the benefit of it. So there'll be a whole area of consultants that will be pushed out. The problem, I think, is a lot of people are trying to use AI to get rid of entry-level jobs. Students who are graduates who are coming in and into the market. And that's, I think, a false economy. Because there's something a graduate is which people don't really take into account, and they should. A graduate is a future leader of your company. And unless you have a flow through, a stream of graduates coming through who then will become the next managers and then the leaders, then your company will have a limited time span, because you'll suddenly find in about 10 years, 15 years, where's the next leader in this industry coming from? And that's just my thoughts.
No, perfect. I totally agree with you, Adi, that actually, eventually non-experienced intern eventually becomes CEO and would have expertise like you. When you started, you were also inexperienced intern someday, and now you are an authority on the subject. And that is what actually human intelligence is all about. Use AI as a tool, but at the same time, have compassion that you need leaders in the future who are humans with a heart.
I don't think you even need compassion. I don't think you need compassion. You need to have the foresight to realize these guys you're taking in now, they're going to be taken over from you, because at some point you're going to have to leave and retire or whatever, and they've got to run your businesses for you, and they've got to be good enough to do that.
Perfect. Totally agree. Adi, thanks a lot. It's a pleasure always to interact with you. And I'm so honored that this is the second time I'm doing that. And thank you. Thank you. Pleasure having you, sir.
Thank you very much. I appreciate it.
By the way, personal question, you will be in London for International Grain Council?
I hope so. I've got to do some things in the next few weeks, which I need to do that. When is the IGC taking place?
It is, I think, on 9th and 10th of June.
I don't think I'll be around for that, because I have to go and have a procedure on my ankle done.
Okay, I'll miss you, because I was planning to be in London, and I thought maybe having a coffee or a drink with you, but it's fine.
If I'm able to, I will be happy to respond and be there.
Perfect. Looking forward. Thanks a lot, Eddie. Have a great day. And thanks again. It's an honor to have you, sir.
Thank you, sir.
Okay. So now we move to our next speaker. So we have Binoy Payot. Vinod is an accomplished agronomist and a senior manager for grains and oilseed market analysis at Strategy Grains, which is also known as Expana. Holding a PhD in agronomy, he leads the crop forecast and market fundamentals desk, specializing in acreage, yield projections, and satellite imagery analysis across the world. His deep market expertise allow him to deliver high precision output and supply and demand data that guides the commercial and risk management decisions of global grain merchants and institutional traders. Thanks a lot, Bennett, for being part of it. I know you have been there. You have joined early. Thanks a lot for doing that. If I'm not wrong, you would like to present. We look forward to a great presentation from you, sir.
Thank you, Deepak, and good day, everybody. And thank you to invite me to speak at this event. So yes, let me share my screen first. Up. Give me 1 minute.
Yeah, please take your time. All yours, not a worry.
I just need to give authorization. Give me 1 minute.
I think we lost Benoit. So in the meantime, Benoit joins. Neeraj, can you just see to it that it can be fixed? I think you've
Yeah,
lost him. Yeah. Okay. Yeah. Yeah, cool. He's back. Yeah, Benoit, you have to just share your screen and floor is yours.
Okay.
Perfect. Yes.
Yeah.
It's
Okay.
loaded. All good, sir. Please go ahead.
Yes. So what I'm going to present you today is like a global overview of the global maize market from a fundamental point of view. And if I just start with some words about Expana, so the company I work for. So Expana is providing data analysis and insights on the whole agri-food supply chain. Such as price reporting on a lot of commodities, proteins, oilseeds, grains, feed additives, also price forecast and fundamental analysis. And so on my side, I lead the operations for fundamentals forecast on grains and oilseeds. And I come from the legacy Strategy Grains company, which is now part of Expana. So what I'm going to present in this during this presentation is we will start with the maize production in countries and regions at the global level, then an overview of the global maize demand for the last years and the next one, a focus on maize consumption for bioethanol production, of course, and some trade dynamics on the main markets. And we will finish with some red flags and takeaways. So let's start with maize production in key countries. So on this slide, you can see per marketing year production of main countries, so US, China, Brazil, Ukraine, EU, Argentina, and India. And also you can see the global production also at the world level. And so those countries represent about 80% of global production. If we start first with the trend of the last 5 to 10 years, so the trends that we have been seen so far. So for example, if we start with US, which is of course the top one producer in the world, production has grown by 4% yearly in average in the last 6 years. Mainly thanks to yield, and so yield is increasing every year almost in US, of course, depending on weather, but would say US maize has benefited especially from agronomic improvement and especially on the GMO sides. If we look at China in the last, I would say, 6 years as well, production has also increased by 3% yearly. And this is mostly thanks to yields as well. And China, since a few years now, is integrating GMO cultivation in its production. Speaking about Brazil, a strong increase in the last years, plus 6% per year, thanks to both area and yield. And as you know, there are three crops in Brazil, three main crops. So the first one, which is a smaller and smaller percentage of the production, but now the safrinha is of course the biggest maize crop in Brazil, and the area tend to extend in the last years, and also the yield are improving. If we remain, we'll say on countries which now production increase, we have Argentina. So Argentina has quite a highly volatile production, but if we look on the last 6 years, of course, and especially last year, there was a big jump in the cultivated area in Argentina. So enable mean annual growth of 5% of its production. In India as well, there was a strong increase in the last years with a very quick development of maize cultivation. So with a mean growth of 10% in the last years, and mostly thanks to area. If we focus more on Europe and Black Sea, of course, Ukraine, the production has been more or less stable since the last few years, and of course, because area is constrained by especially the war with Russia, while yields are very volatile and Ukrainian farmers are facing, would say, challenges around access to seeds and to fertilizers and inputs as a whole. And in the EU, this is a completely different story. Production in the last 6 years, in average, decreased by 2%. I would say that EU farmers are getting more and more rid of maize cultivation because EU maize faced a lot of weather challenges in the last years with hot and dry summers, while I would say irrigation systems are not always usually properly developed, like in Romania or Bulgaria, but also in France. And so EU farmers prefer to cultivate winter crops such as wheat, barley, or rapeseed. So because of this area maize in EU is losing more and more share in the production. So for example, now EU production is around between 55 and 60 million tons usually, but in the past, if you go back 10 years ago, it could be easily 65 to 75 million metric tons. At the world level, annually, the growth is of 3%. Of course, it does not prevent to have decrease from sometimes, but in average, this is plus 3%. And this year, for 25-26 marketing year, the world production reached a record high level. So especially in the US, very big crop, high area, record high yield, and very big crop in Argentina. So the one which has been harvested a few months ago, where the area cultivated was very big. For Brazil, we expect to decrease this year, so with the safrinha crop which is cultivated right now, because some drought, of course, is impacting the safrinha crop. For next year, we expect a decrease of 2% of the world production of maize. So for 26-27, so in the northern hemisphere, the swings are ongoing and they are almost finished right now. But we expect a slight decrease of the area first. So in the US, to the benefit of soybean, of course. In the EU, to the benefit of winter crops. And we expect yields to come back to a more normal level, while they are very exceptional in 25-26 in the northern hemisphere. Once again, in the northern hemisphere, the weather should be the main driver of the maize output and yields, while fertilizer could have some impact, but still not as big as weather. It's another story when we speak about southern hemisphere, so safrinha crop, which will be sown, I would say, in 9 months, something like that, or in Argentina, where the crop will be sown in about 6 months. Here, the fertilizer could have an impact on the area cultivated and sown. So we expect a decrease of the maize area in Argentina, quite a big one. And maybe not a decrease of the area in Brazil, but at least a decrease maybe in yield potential. So next year, at the global level, finally, a very decent crop expected, but with really some threat on South America, while in the Northern Hemisphere, weather should remain the main driver. If we now look at global maize demand, and if we focus on the graph on the left, you see total maize demand since the marketing year 2021. What you can see is that usually global maize demand increase year on year. There can be some decrease from time to time, but usually it increases. And in green here you have the feed demand. The feed demand is the biggest share of maize demand in the world. So it's about 780 million metric tons. So for example, the last time it decreased, it was in 22-23, so it decreased by 2%. It decreased because of the decrease in global production. And we can say that maize demand is very much correlated to the crop level, to the maize production first. This is also the most elastic demand in terms of volume, and compared to industrial demand, feed demand is very elastic in terms of volume. It can decrease maybe by 10 or 20 million tons a year and increase by 40 million tons a year after. In 26-27, we are rather cautious regarding global feed demand, only plus 1% next year. Because global production will decrease, as I said, and also because of the threat around macroeconomy. Also, feed demand of maize is not only correlated to the crop level, but also to the spread with other commodities. And for example, we were speaking about EU a bit before, but in the EU, feed demand is very interchangeable between maize, wheat, barley, and soy meal. You can have a lot of switch from one commodity to the other. In red, you have the biofuel demand, and what you can see is that biofuel demand has increased quite a lot since a few years, especially in some countries, and I will come back to this in the next slide. While in blue, you have other feed industrial and human demand, which are composed of food, starch, seeds, and waste, and it's not very elastic. On the right, so on the graph, you have the global surplus and deficit graph. So it's global production minus global demand for every marketing year. And the curve is the stock-to-use ratio of main exporters. And just, I didn't say this, but all these fundamental data are proprietary data from Expana. So this year, 25-26, we expect finally to end with quite a big surplus. And as I said, the global production is record high, while demand is high, but not as high as production. Next year, it's not the same story. We expect a deficit of a bit less, between 30 and 20 million tons. A deficit at the global level, so the global production would not cover global demand. But just have in mind that this year is very heavy. We have a lot of stocks at the global level, especially expected in the US, for example, in Argentina as well. And next year, despite the deficit of production minus demand, we expect a comeback to a more balanced situation. This being said, of course, there are still a lot of uncertainties around production for next year. And the weather in June, July, August will be critical for global production. Let's do a focus on bioethanol production and maize usage behind this. So on the left, I show maize consumption for bioethanol production, and we say in main areas where it counts. So first, you can look at this curve in green here, which is Brazil. We can see that in the last, would say, 5 to 10 years, maize consumption for bioethanol production has increased very much. So from almost 5 million tons 6 years ago to more than 30 million metric tons today. So this is a huge development in Brazil. And have in mind that for the time being, incorporation mandates of ethanol in Brazil is 30%, while there is plan to increase in the future. Another interesting country, of course, is India, where also maize consumed for bioethanol production has increased a lot in the last few years, going from 0 million tons to more than 12 million tons today. And so the incorporation mandate of 20% has already been reached much sooner than expected, and there is plan to increase to full incorporation rate in the next years, but it's still not completely set. Also in Brazil and India, maize is competing with sugar cane especially, but other raw materials in incorporation rates or to produce ethanol. And in India, for example, next year, we don't expect necessarily an increase of maize used for ethanol. So here, in 26-27, because there could be more sugarcane and broken rice used to produce ethanol. But it remains to be seen. Another country also is US, and historically it has always been a very important producer of ethanol from maize. And you can see, so here on this level of volume, there is some volatility, of course, but I would say an upward trend in the last years. In the US, the incorporation mandate is 10 to 15%. But contrary to Brazil and India, US is a crude oil producer, while Brazil and India are not, and they are trying to develop bioethanol to be less dependent on crude oil or from oil imports, while US is a crude oil producer. And it led us to the graph on the right. Maize consumption for bioethanol in the US is volatile and responding to profitability. So on this graph, you can see, so in red, maize consumed to produce ethanol, and in blue here, the ratio of crude oil prices on maize prices. So the higher is oil price and the lower is maize price, the higher is the ratio. And you can see that when it's profitable to produce bioethanol from maize, then maize consumption is increasing to produce bioethanol. So it can lead to a variation of the real incorporation rate of ethanol into gasoline from 8.5 to 11%, meaning a range of 15 million metric tons of maize consumed annually in the US to produce ethanol. And you can see that currently, of course, with the war in Iran, the ratio is very high, meaning that profitability of producing maize, of producing ethanol from maize rather than using crude oil is very profitable. So we expect an increase of maize consumed in the US to produce ethanol. Finally, let's finish with trade patterns. So on the left, you have our trade estimates and forecasts for the main exporting countries in the world. So in blue, you have US. So US this year, as you know, should export a record high level of more than 80 million metric tons of maize, thanks to its very record high production and despite a strong domestic demand. While it's totally a different story in Brazil. In Brazil, now since a few years now, exports are capped, are constrained by strong domestic demand in both the feed sector, but also in the ethanol sector. So the share of the exports lost by Brazil has been taken by US, of course, and to some extent by Argentina. Argentina, which is not using a lot of maize to produce ethanol, but had a record high crop this year. And for next year, in 26-27, we expect that Brazil will still be constrained. We still have a rather low exportable surplus, while it should remain high in the US and it should increase in Argentina. So here you can see the share of each origin in world trade. So here you have a big presence of US on the global market, while a rather low presence of Brazil compared to the past. At the same time, you can see that the world trade as a whole will increase next year, while it has already increased this year. That being said, that China is more or less out of the market. It's not very present at the moment. It imported a little bit of maize, but not so much. And it imported from Brazil when it do so. So would say the more and more high needs of maize to produce ethanol is bringing potential big volatility on exportable surplus on the one side in the US, in Brazil, and on trade patterns. For example, because if China needs to come back to the market to import, maybe origination from Brazil will be limited, and it will need, and maybe this is what will come out with the potential deal between US and China, but China will need maybe to import from US again. And also, it means that if there is a crop accident in importing countries, or in China, or even in India, so for the time being, it exports not a lot of maize, but the need of more and more maize to produce ethanol in India brings the fact that India needs to produce a minimum amount of maize to be able to answer to its domestic demand. Otherwise, imports could happen in the longer future. So some takeaways on this presentation. What we can say is that global maize production is increasing, structurally increasing, even if we have volatility from one year to another. We can have some decrease sometime. A big watch point is the fertilizer market and tensions on it, which should threaten the market production for the marketing year 26-27, especially in the southern hemisphere. And I would say in the northern hemisphere, even if we can see already this year some lower fertilizers application, I think it's mostly a story around next year. For 27-28, so especially in Europe, when maize will be sown, maybe next year, so in 1 year. If fertilizers prices are still the same as today, we can see even a lower area next year than we see this year. Maize ethanol output is going fast, so the world is needing in some countries more and more maize to produce ethanol, which add pressure on volatility, of course, on the global market. On the trade, US is still leading the global exports, of course, with Argentina gaining momentum, and Brazil is constrained by its domestic demand. And we need to keep an eye on China, of course, which is out for now and could be a big game changer if it come back to imports. That's all for me.
That's awesome, Benoit. Very extensive presentation. If you can stop sharing, then actually we can have just a couple of questions. Yeah.
Sorry.
On the top, you'll have a button, stop sharing. That's all.
Yeah, sorry.
Yeah. Awesome. So Benoit, just a couple of questions. I know that doesn't look very optimistic situation when it comes to maize production at least, but we have seen 21, 22 also, right? We had a dip and the next year was humongous surplus. Situation doesn't look same for 2027 because the reason for a dip in 2021 and what we see today are very different. Weather is one. Secondly, is that the pressure because of the high cost of fertilizers. That doesn't look like going very soon in case the Hormuz conflict is not solved. And even if it is solved, availability of natural gas, which is used to make fertilizer, is not going to come online very fast. We have seen the destruction happening in Middle East, which supply a substantial amount of gas. For example, in Qatar, they say it is going to take them 3 to 4 years to come back to the same level. We are also seeing that protectionism when it comes to fertilizer. China is not exporting anything. Russia is also not exporting anything. So doesn't look like that the next year would be that kind. And then we are having, I would say, the weather challenges, which are becoming more extreme because of climate change. El Nino is one part of it, but other than that, also we have seen that the patterns have been pretty inconsistent when it comes to the northern hemisphere as well. US, we have seen what's happening now, and doesn't look that actually the next year would not be that bad, or would be a little bit less bad, but still could be bad because of the climate change issues. How do you see going forward that, because of this push for fuel, right? Are we compromising the food and feed?
Yeah, so just to set up the context, so we are going to finish the 25-26 marketing year with a lot of carry out stocks on both maize and wheat. And when speaking about the maize market, we always need to consider as well other markets such as wheat, so of course, and the soy meal market. Because if there is a threat, let's say for 26-27 on production and a potential lower feed demand of maize because of this, there they can be switched to to soy meal and wheat. So as I said, we are going to start the 26-27 marketing year with high stocks on maize, but also on wheat and on soy meal. So for 26-27, the crop has been more or less done on wheat, okay, in the northern hemisphere at least, and we expect a good crop in Europe for wheat. While on maize, as I said, of course, this year we should have lower acreage in the US, low acreage in Europe, but still we can still have decent level of production. So 26-27 could be a lot weather driven again, but where there is a big threat, it's, for example, I can take the example of Europe, but the wheat crop, which will be sown in October, November this year, could decrease a lot if nitrogen prices remain as they are, and if access even to the physical fertilizer is limited. So we can expect a decrease of the area sown this autumn. Also in the US, maybe on wheat, and in a couple of other countries. So it's a story around about 27-28 marketing years then. So I would say the threat around the agri-food fundamentals and supply chain is going to gradually increase and erase the effect of high carrying stocks that we could have. Also, another topic is in the EU. I can remain on Europe, but for maize for the 26-27 marketing year, we don't expect big corn imports for the time being, at least around 19 to 20 million tons, which is quite high compared to the past, but it's not huge. We have seen higher imports. One reason is this year Europe should have a very decent wheat and barley crop, and it means that they will take a big share of the feed demand to the detriment of maize, limiting the needs of Europe to import maize. Of course, they will need to import, but maybe not a huge amount. Also, one other thing to have in mind is that the very high crude oil prices are currently making crush of soybeans, very interesting to produce oil for biodiesel. It means that a lot of soy meal is available on the market and is going to take share in feed demand from maize and wheat. So I would say for in the next months, maybe next 6 months or so, like this, the market should be quite preserved from the big tension on the fundamentals. But going into early 27 and the end of 26, it could become a very different story when we will see that area sown for the 27 harvest will decrease because of fertilizers.
Right. And second, also, like, on just not the availability and production, even the price points, right? Even if we have yields and production, whatever, like, with the reduction, the cost of input would be prohibitive for farmers to sell at low price. So do you think that even that impacting, because urea is priced nearly 70% above? We are seeing the same rally in phosphate also now, and potash might also, right, join the bandwagon, and that will increase the overall cost of production itself. To maintain the profitability of the producers, do you see that there is a possibility of inflationary pressures are coming in and making a divergent trend of where the input cost of the farmer start driving the prices going forward?
Yeah. So if we focus on Europe and on the northern hemisphere as a whole, when winter wheat sowings will start in September to November, I think as profitability of growing wheat especially, but also rapeseed, barley, and after corn is very low. The profitability is very low. We expect, would say, general decrease of the cultivated area in Europe, at least, to the benefit of uncultivated area. In fact, that's a possibility because it's not profitable anymore or not enough. And so in like low fertilizer, in soil which are not naturally very suitable for crops, let's say in France, in Eastern Europe, will be maybe you will see more set aside area. So yes, when these sowings will happen this autumn, and we will see that sowing intentions are quite low, then prices could start to increase quite a lot, and not only because of cost to produce wheat or to produce maize, but also because then we will see for moving forward that there will be a potential tension on the market and maybe even tightness on fundamentals.
Perfect, Binoy. Thanks a lot for clarifying these couple of points, because Europe is predominantly democracy, and we have seen what farmer can do when the EU and Mercosur trade agreement was being structured, and what is their political economy and political power. We have seen farmers can do that. So I think we are going to be having some interesting time going forward in Northern Hemisphere for sure. Southern Hemisphere, I know we have our own challenges, and looking forward to have once again, like, when we reach December, where we'll be having another session of the same event, coming back and I would say tickling your mind a little bit more about how the 2027 would look like. Thanks a lot. In the meantime, it was a pleasure hosting you, and thank you.
Thank you very much.
Okay. So guys, with that, it's a pleasure and honor to be concluding the second session of the Commodity Week World 2026. In the morning, we discussed about how Asia and Pacific is shaping up when it comes to maize, and then moving to Europe, Middle East, and Africa. We also touched upon some very interesting global intersection because we all know the Western Hemisphere of US and Brazil cannot be ignored whenever we are talking maize, irrespective of geography or the region you are touching. Even if you're talking Asia, you'll have to look at what's happening in Western Hemisphere and vice versa. So we will see a lot of intersection among the regions when we have a discussion. In fact, bringing on the views of Indian exporter, Bimalji was also with the mindset, because when we see the globally negative yields and productivity, India, at least on paper, as per the government numbers, is giving some hope. But as Bimalji rightly pointed out, the parity is a problem. That's a big question mark. And even India's production doesn't look to the level where it can actually shoulder some of the deficit which we are seeing in other parts of the world. We've also talked about how the US-China equation is just not impacting the China or the US, or in a way, the Asia and America, but it is also impacting the other very critical import markets when it comes to Middle East, when it comes to Europe. Europe also, with the increased demand and reduced production, would play a vital role. And as Eddie rightly mentioned in technical analysis, that later in 2027, we might see a breakout of maize as well. So keep an eye on maize. It's an interesting commodity, and merging fundamentals, technical analysis, as well as geopolitics, which is now becoming very important, and definitely a little bit of support or push from technology, which is artificial intelligence. We might be having a better understanding and better positioning when we are doing trade in maize. With that, I thank you for your participation to this second session. We would also like to invite you 9 a.m. New York time, that's 6:30 India time. We would be coming with our third session. This time we move further west, and we'll be talking about America, the North and South America. We are having an interesting lineup. We'll be definitely talking about numbers, the total supply and demand, the balance sheet, but we'll also touch upon a very important aspect in the upcoming session. We will be talking about how the global collaboration is important. We'll be talking about how soil is going to be playing a very vital role to keep maize production sustainable. We'll also be talking about from someone who is very close to the first Nobel Award recipient in agriculture. And we are having a very interesting lineup. I keep a little bit of suspense of all the great speakers, which you'll be seeing in upcoming session as well. In case you are not tired so far, please log in again, 9 a.m. New York time, 6:30 India time, and look forward to have you in the last session of the day on maize.